We've got some breaking news for you today that could have a huge impact on the real estate market. The Federal Reserve just did a 50 basis point rate cut, which is 0.5%. And now this happened to their federal funds rate, which is not the same as mortgage rates. So we're going to talk about how this is going to affect the real estate market now and into the future, and what to keep an eye out for as we move forward. I'm Hannah Escher. I'm a mortgage advisor and rookie investor with 2 properties, and I'm so excited to talk with you all about this today. The Federal Reserve just cut the federal funds rate by 50 basis points, which is huge. That is 0.5% rate cut. It is a very large cut, and the last time a cut happened to the federal funds rate was in 2020. So we've been experiencing throughout this whole time over the past couple of years an increase in the federal funds rate, where we went from nearly zero during the pandemic to now where it has been, which is around 5.25% to 5.5%. Now, just as a reminder, the federal funds rate is the rate at which the Federal Reserve lends their money to other banks. So this is an overnight lending rate that banks have between each other. And that's why when we're looking at consumer rates are usually going to be higher. Most of the time that spread is going to be about 1.5% to 2% higher than where the federal funds rate is. So keep that in mind as we're talking about this rate cut that just happened. Sometimes it doesn't affect mortgage rates in exactly the same way as we might think it would. So let's talk about this cut. It is amazing news that we're seeing a cut right now. And Jerome Powell, the Fed chair, did say very clearly that he believes now is the time to start on this rate cut journey. In his speech after the Fed meeting, he did state clearly that the Federal Reserve does believe that by the end of 2025, their federal funds rate will actually be 2% lower than where it had been at that 5.25% to 5.5%. Jerome Powell was also very specific, saying that this is not a plan that is set in stone. Everything is still going to be data dependent. So let's talk about how this 50 basis point rate cut affects mortgage rates. Well, in order to get to there, we have to understand what the market was anticipating going into this meeting. As we went into this meeting where the Fed met for 2 days and determined what they would be doing with their monetary policy, the market had been digesting economic data that came out prior to that meeting. So there were job reports, employment reports, inflation reports. All of these things came out prior to that meeting. Because of those numbers, the markets and mortgage rates had already anticipated that 50 basis point cut coming. So rates were already reflecting a lower rate, and the market was already doing things as if that rate cut had happened. With that in mind, as we came into this Federal Reserve meeting, there were possibly 2 outcomes. One is that the Fed would be way more positive than the market anticipated when it comes to rate cuts. If that had been the case, then the market was looking for rhetoric from Jerome Powell stating that we for sure will continue this rate cut journey no matter. The other thing that could have happened is that Jerome Powell could have been more dogmatic about what it looks like going into the future with rate cuts. And then lastly, which no one really anticipated happening, would be that the Fed didn't do any rate cuts or that they did a smaller rate cut. However, the market was very confident that they were going to do a rate cut and confident that it was going to be 50 basis points. So that happened. Since Jerome Powell was very clear that future rate cuts are still going to be data dependent, that actually made the market react less favorably. So rates actually ticked up slightly. Now, rates are volatile, right? They are going to change daily. Sometimes they change multiple times a day, depending on the data that is available and the data that comes out during those business hours when the market is trading. With that in mind, what the landscape looks like now is that rates have kind of settled to where they're going to be until we get more economic data coming out, either showing that the economy is weakening or showing that the economy is strengthening. Where we are right now, and Jerome Powell stated this in his meeting, is that the economy is still very strong. And that is why they're still going to be very data dependent when it comes to deciding when the next rate cut's going to happen and what that's going to look like. So what does that mean for us as buyers who are maybe looking to buy our first, second, third property? And what does it look like for us as homeowners who might be looking to refinance at some point in the near future and waiting to have a break in the current rate that we are paying? This is a great example of not trying to time the market. It is so difficult to time the market for anybody, whether you're literally an economist who looks at things every single day, every minute of the day, or whether you're more like most of us who are going to be digesting this news as it comes out. Going into the meeting, rates were actually lower than what happened after the meeting. Now, again, this was one of the two outcomes. However, it was one of the outcomes that we were hoping wasn't going to happen. We were really hoping for very confident, positive language from the Fed moving forward, confirming that we are going to see these continued cuts. However, since there was some discord within that conversation, which Jerome Powell also said that not all of the board members were in agreement on what this looks like going forward. Because of that, we are seeing the volatility that happens around that lack of extremely positive confidence moving forward with this plan of rate cuts. So for us as those homeowners and those buyers, it comes back to if we have a goal and there's a way that we can get there that's in front of us, sometimes it's the right time to take it. It's really hard to time the market. And at the same time, it can be really easy to be always chasing that better rate, that better deal, waiting for that better thing to come. This circumstance is a great example of why it can be so valuable to take the opportunity that's already in front of you. And for those of you who are looking into refinancing, maybe now is the right time if that's going to save you money and you could do it at a low cost. For those of you looking to purchase a home, if you're seeing deals out there that make sense for you, maybe it is time to consider those deals. This was a hugely pivotal meeting for the market. It was a hugely pivotal meeting for real estate and interest rates. And the reality is that the Fed's next meeting is not going to happen until after the election. So think about how there can be upcoming volatility in the market when you're making the decision to wait on that investment. Everyone's circumstance is going to look different. So you have to do what you know is going to be the best for your situation and your goals. So if you've been looking into the possibility of refinancing, or if you've been thinking about getting pre-approved, but have been waiting for those rates to drop, maybe the time is now, right? Maybe those rates aren't going to be dropping as quickly as we thought they would. And it's also very important to remember that the market is volatile, especially if we're going into an election cycle. It is hard to predict what that's going to look like. So if you're working with a trusted mortgage advisor already, maybe it's time to get them on the phone and see what's possible. And if you're not working with a mortgage advisor yet, you can always go to biggerpockets.com/find lenders to find a trusted lender in your area. Maybe you still feel like you want to wait a little bit, and that's okay. Everyone's situation is going to be different. With that being said, it's always good to be prepared. So if you think there might be opportunity for you to get into this market or refinance in the near future, I would highly recommend that you reach out to that mortgage advisor that you're working with. Ask them what you need to do in order to be ready to hop on that opportunity if it happens. And again, rates change every day. So if you're waiting for the best rate possible to refinance, you want your profile and your file to be ready to go when that rate drop happens and when that makes sense for you. A couple things you can do to be ready for these moments is have a completed pre-approval. That looks like pulling credit, usually verifying income documents and asset documents, getting all of those pieces of information ready to go so that when that rate looks like it's in a good spot for you, your lender can lock you in. The same thing if you're a buyer. You don't know when the right property is going to come up. It could come out tomorrow. It could come up in 2 months, 3 months. All you can do is be ready for that opportunity when it happens. So again, work with your mortgage advisor on what you can do to be ready when that next opportunity happens. With all of this being said, yes, I mentioned that rates went up slightly after the meeting. However, rates change every day, and there will likely be dips and rises as the months go forward, as the days go forward. So if you've been waiting to do that refinance or to get into that next investment, it's still a great time to do it. Rates are always going to be fluctuating. Prices are going to be fluctuating. However, with that being said, prices are still going up, and the more rates drop, the more we anticipate prices going up. I was just reading another article talking about how economists believe that this next spring selling season is going to become quite a bit of a frenzy because rates should be lower and there should be more inventory, positioning people to be very competitive in the market. With all of these changes happening in the market and how quickly these changes happen, it's really important to stay updated. And we'll be keeping you updated on this channel. And if you go to BiggerPockets.com, you can find other content on there that's regularly updated with new information that becomes available. To wrap up, this is such a huge win for the market in general, for inflation in general, to see a 50 basis point rate cut. We'll keep you updated as more information becomes available. And if you found this video helpful, like and subscribe to the BiggerPockets Rookie channel for more videos just like this. I'll see you next time.